MiCA versus the Genius Act. Two roads for stablecoin regulation.
Okay, so here we go. Thank you, fellow panelists. So good afternoon, everybody, and welcome to Signal World. It's a great pleasure to be here to discuss a regulatory conflict that will define the future architecture of global finance. So for years, the crypto industry operated in a regulatory gray zone, always asking for clarity. Now the world's two largest economies have finally delivered two massive yet fundamentally different answers. One is Europe, markets in crypto assets, MiCA regulation, and the other one is the United States, guiding and establishing national innovation for US stablecoins, aka Genius Act. So our panel today is titled MiCA versus the Genius Act. So we're looking at these two distinct philosophies. And I would like to and we have great panelists that are going to give us their insights. So I'm just going to hand it over to them. But before that, let me just introduce myself. My name is Lorenzo Barbantini. I'm the co-founder and CRO of Colossus Digital. Colossus Digital is a company that connects asset holders to yield providers in the digital asset space. So here with me, we have Ron Segev, founding partner of Segev LLP. He's going to give us his insight and views on the United States. He advises clients navigating and Genius Act licensing and preemption rules. Then we have Pankhuri Bansal, blockchain expert, United Nations. Pankhuri offers the essential global macro perspective, how these regulation rules impact cross-border trades. Of course, this for the UN is very important, financial stability, and the goal of interoperability. Ian Dawson, founder and CFO of ZBX. And Ian will give us his view on how this digital regulation applies to more the European space. And then we have Tomas Perez-Quevedo. Now he's the builder, and he's the co-founder of Maka Chain. Tomas will give us the builder's perspective on how these two regulations impact this space. So first of all, quick round of, apart from what I've done, and I would start with Pankhuri, please.
Hello, everyone. Good afternoon. I'm Pankhuri Bansal. I represent the United Nations as a blockchain and AI expert. I also run my own company called Blockom Consulting. So at the UN, we are creating crypto and blockchain and also AI standards for wider adoption of the technology and to increase cross-border trade across jurisdictions. So happy to be here and discussing the Genius versus MiCA Act. Thank you.
And then now let's hear from Ron.
Hello, everyone. Ron Segev, founding partner of Segev LLP. We are a full solutions business law firm in North America with offices in the United States and Canada. Our specialty is gaming, betting, payments, fintech, and including crypto and blockchain.
And I would move to Ian before we go to Thomas the builder. So Ian,
sure,
please.
Yeah, Ian Dawson here, co-founder, current CFO at ZBX. So we're a MiCA compliant trading platform in Europe with a pretty large license, and we service the gaming world through our fiat crypto solutions and payment gateways.
Thomas, please.
Well, my name is Tomas. What we do is we help companies on Web 2 become in Web 3 arena in the seamless, and we build a blockchain that doesn't need gas fees in order to transact. Your token is our fee, and now we think that in that way we can take 80% of the market that is not in blockchain or cryptocurrencies.
Okay, thank you very much. So let's set the foundations for our discussion, and I'll ask all the panelists to try and keep it as much as possible connected to gaming, of course, so which is where we are. And so I'll start with you, Ian. And I'd like to know, as a CFO operating a regulated business, can you hear me? Because I can hardly hear myself. Okay. MiCA is now the law, so specifically regarding stablecoins. So I'd like to have your take from a practical business perspective. How is MiCA comprehensive classification system forcing European platforms to restructure, if at all? And what has been the immediate tangible compliance cost of that clarity?
Yeah, so well, there's a very obvious one if you're in the MiCA world and you're in a trading platform. If you're licensed as a crypto exchange in Europe, you have to now apply for a limited PSP license in the PSD2 category because stable coins, or in Europe, EMTs, are electronic money and they fall under EMI legislation. So an immediate impact of regulatory changes in Europe is additional resources, additional license application, additional tech, additional things for things that we've always done. You know, the requirement here is if you custody stablecoin and you make transfers in stablecoin, you now, the MiCA license itself isn't enough. You now need PSD2, what they call PSD2 overlay. And that was the guidance by the EBA given this year. There's also a regulatory convergence in Europe now. So they're looking at taking it away from the national competent authorities and centralizing it in Europe, which for us is a little bit scary, right? So it's direct oversight. And that's because they see now that crypto is systemically important, and they're now regulating crypto businesses like they would the banking world. So it also, another overlay on top of that is things like USDC, which is regulated in Europe through French EMI license. You have daily reporting requirements and monthly and quarterly reporting requirements to detail what you do and how you transact using that stablecoin. That's mandatory, that's a legal process. So there is an additional heavy burden on regulated businesses. But the positive is that, well, from my own perspective, so this is my personal statement, a CASP license with stablecoin solutions in Europe is a bank. You can't call yourself a bank, but you are a bank in the digital world. So you can do everything that the banks do. You're just doing it digitally, faster, with the blockchain. Yeah.
Thank you. Thank you very much. And now pivoting to the US, Ron, what is the core regulatory philosophy behind the Genius Act, if, you know, from your point of observation? And why did the US choose a narrow stablecoin specific approach rather than following the UN with a broader and a broader crypto market framework? Probably, you know, for once they came afterwards, and so they had the chance to look at it. What's your view on this?
I think it's ultimately all in the name, right? So if you unpack the acronym, it's the guiding and establishing innovation in US stablecoins. They're only interested in US stablecoins, right? So there's no hiding. And so what do I mean by it's all in the name? The United States is specifically interested in controlling their monetary policy, their monetary sovereignty, and when they look around the world, they see that gold is usurping USD as a reserve asset among countries around the world. They're worried that the USD is no longer going to dominate. And so one of the ways that you solve that problem is you create demand for US T-bills, US denominated short-term money market funds, and US cash. And the Genius Act is built such that entities that are licensed under the Genius Act can only hold those USD denominated assets, can't pay interest on it. It has nothing to do with tokens or you know, other crypto. It's just a digital form of payment. It's very much focused on payments. So philosophically, it's a tool that the United States can use to control their monetary sovereignty and their global monetary policy.
Okay, yes, super agree with what you're saying. Also, I would add the fact that for as much as that regulation is US-centric only, still the dominance of the dollar in the digital dollar has spread and is already spreading anywhere and everywhere.
Yeah, and I think part of the extra layer of genius on the Genius Act is that unlike MiCA, the Genius Act actually contemplates entities from foreign countries participating in the US market. So it kind of leaves an open door, and it says that if there's other jurisdictions that have a regime that's similar in in approach to the Genius Act that they will they'll acknowledge those regimes and they'll allow entities licensed under those regimes to participate in the U.S. market. So what it does is it creates a more global demand for USD.
Okay, thank you very much. And now moving to Pankhuri. Now, global view, and of course you looking at it from cross-border. So from a cross-border financial stability standpoint, which framework, MiCA or Genius, do you see setting a better precedent for what you do? And what is the risk of regulatory friction between these two markets? Because you're going to have entities on the two sides of the trade operating under two different regulatory frameworks. So what's your take on that?
Yeah, absolutely. So just to be like segregating between the two, obviously, MiCA focuses on broader crypto assets, while Genius Act is mainly to do with payment stablecoins. So what the difference here is that with MiCA, it gives you access to a broader European market. So if you have to do anything cross-border within the EU, it becomes easier now with MiCA. So compliance-wise, jurisdiction-wise, it's easier to settle transactions or to like conduct activities and businesses across borders within the EU. But when it comes to Genius Act, of course there's a federal law, but there's also a state regulatory affair going on over there. So even though you have Genius Act, you still have the layer of federal governments coming into place. So I think this makes it a little harder for any cross-border transactions. And we also need to understand that 60 to 70% of stablecoin transactions right now are coming outside the US also, emerging markets, right? Argentina, Brazil, Nigeria, for example. So even though the regulations are across within the US jurisdiction, how is it impacting consumer outside? What happens, let's say, in terms of redemption? What happens in terms of disclosure, in terms of offshore custody? So how is it going to affect the consumer? It's very important to kind of have that interoperability even between the US and the EU, which is not clear at this point in time. And I feel this is going to create a broader friction within the market if that is not resolved at the basic layer. It makes it difficult for cross-border transactions to settle, and especially in terms of financial instability, right? Because 70% of government treasuries are now backing the US dollar, so which is a great amount. So let's say if there's a dollar USDC depeg or a USDT depeg, what happens to the entire financial system? That creates a major flaw into the whole system. And as we know, like if anything happens in the US, the whole world collapses. So we really need to be careful of that and have broader, wider compliance strategies in place for that to happen and to have like seamless cross-border transactions.
And I think I read recently that Western Union is actually launching a stablecoin also. So what's your take on something like that from your points of observation? Of course, remittances, that's the biggest market. Anybody that has any kind of business is going down and is launching their own. So how do you see that impacting your...
I mean, that's eventually going to happen. We have all these different financial institutions or, payment intermediaries coming up with their own stable coins. But ultimately, I think US dollar is denominating everything. So if that is not regulated and that is not interoperable, it becomes difficult for a Western Union or a PayPal or anybody to kind of be more compliant. So in the end, it's the dominance of, even though it's harsh, that we don't want the dominance of the US dollar. But with stable coins, it's becoming even more obvious that it's the dominance of the US dollar right now. So until the compliances are clear at that front, it's going to be the same play no matter who launches what stable coin. It's the compliance risk and the regulatory risk remains the same.
Okay, and now, thank you very much. Now, and now the builder's view. So Tomas, you're building the next generation of decentralized financial infrastructure. And so I assume that you always have to think about what your users are going to be using in terms of regulation, because you're not regulated yourself, but your customers are and need to be. So what's your immediate reaction? What does the certainty provided by MiCA and Genius primarily represent? Do you see that as an opportunity for institutional adoption, or does it represent a barrier to to your activities? So you see it actually something good for your business or not? And how do you approach that as an innovator and as a builder?
So in my business point of view, to be regulated, increase the businesses can be onboarding into the crypto arena. Not regulated is kind of hard for regular business because they don't know in which arena they're participating on. So regulation is good. Over-regulated is not good for businesses, but be regulated is good. Now, to have the eye of the government on businesses to make sure that they're doing the right thing, why not? You know, we are here just to provide another railroad for people to moving money, not to create something that is bad for our society. So for me, crypto gives the opportunity for the 70% of the population that is unbankable to become bankable. We all live in countries that has banks, but come on, if we live in Africa, in the mountains of South America or Latin America, we don't have access to bank. We gotta maybe take a bus for 2 days or work for 3 hours. So anybody, anywhere can be bankable and protected at the same time. In Web3, right now, we see the impact of, thanks to the Genius Act, the opportunity for any organization to create their own stable token. And if you create a stable token, allows that 80% of the population to be bankable in crypto, and their currency cannot have fluctuation like Bitcoin. But the other barrier is this change that allows you to purchase these stable tokens has a little problem. They have to teach you what is a gas fee. It's an extra component to the crypto arena. And our business, we took that barrier away, allowing people to transact any cryptocurrency and the charge be in their own fees. So a good example is all these businesses that we have right here, those casino online. What they do is they accept crypto payments in USDT, USDC normally, and then they gotta teach their people, yes, use USDT and Ethereum, but you have to buy Ethereum fees. I wanna play $10, but I cannot buy $10 in Ethereum. If I want to MetaMask, I gotta buy $40. So doesn't make sense for me to buy $40 to play $10 in my casino when I can go and just use Maka Chain and pay $10, gas fee 10 cents, don't need any extra token, no need education. We can onboard that 80% of the population that they don't want to learn and we don't need to teach. So huge opportunity. MiCA help us a lot because now what MiCA is doing right now is protecting you guys' money because it's a lot of exchanges that comes and go every single day and people losing money. Now we know the government is going to oversee those players and make sure that we don't get screwed. So regulation is good all the time and we know where we're playing.
Okay, thank you very much. No, I also heard that in terms of gas fees, there are other solutions, for example, where you have sponsored gas, where you have certain chains where there's a brand that sponsored all of the gas fees, basically doing what you say, killing the fees, because I absolutely agree that the mechanism of entering digital asset space and then maybe you buy Ethereum, then you take a fee, then all of a sudden, oh, it's not enough, I got to do it again. And there's more fees, and this is just a frustrating mechanism on one side. And then maybe I'd also like to have your take on, and what does it change for the consumer? So what's the change of the consumer? I think that when you have either a chain that doesn't have gas, or that takes the gas from its own, so you never have to add anything, or a mechanism where this gas fee can be sponsored, that's probably also an interesting take. What's your take on this?
Yes, what you say is sponsored gas fees, but in reality, they're not taking the problem from the top. They're just fixing a little problem because no matter what, if you as a customer don't pay the gas fees, the institution has to go buy the gas fees for paying for you. They're still doing a job that we're doing from the top. Yep. So we're coming for the chain, bringing the solution to every single company here, actually, that they don't need to worry about gas fees because the chain take care of that, and the customer pay for that. Little percentage.
Okay, thank you very much. So staying on this topic, so consumer and financial protection, Ron, let's, so MiCA and Genius, one-to-one backing, strict redemption rights, but they differ on what reserves can be. So Genius is arguably more conservative on reserve composition, highly liquid, short-term treasuries. From a pure financial stability standpoint, does the Genius Act narrow focus and extremely tight reserves requirement offer a superior guardrail against systematic collapse compared to the broader, more categorized approach of MiCA? Is that, do you want to take a shot at that?
Well, I have to say, and I hate to answer this question like a lawyer, but the answer is maybe. And the reason the answer is maybe is because we haven't seen the regulations yet, okay? Genius Act was enacted into law June 2025. We're expecting the regs to drop sometime in January of 2027. So that's a ways away. My gut instinct is that yes, it will provide some more protection to consumers, customers. The criticism is that it doesn't offer FDIC-style protection, like a deposit insurance that you see in traditional banking. But what it does is it gives coin holders a first right against Treasury in the event of insolvency. So that's something. Now, if I can steer this back to the gaming conversation, because this is a gaming show, the other thing we need to keep in mind is that there's also a regulatory layer in the gaming context. So in particular, if MGM or Caesars decides to launch their own stablecoin for use among their properties, online and offline, restaurants, casinos, what have you, they would be governed under the Genius Act, but they would also be governed under their gaming regulatory regime, which requires segregation of player deposits and so forth. So there is that extra layer of protection. I guess the lesson there is it also depends on the industry in which you're operating the stablecoin and the industry that you're offering the stablecoin in.
Okay, thank you very much. Now, I'd like to maybe move over again to cross-border competitiveness. So, but I'll start with Ian now. So the MiCA's great shift in the EU is the passporting. So before that, you had to have a license in every country. Now you passport to 27 countries. It's a single market for crypto services. How much of this competitive advantage in that single EU license do you see, and how does it stack up against the massive institutional debt and the global currency power that the Genius Act is designed to protect? So what is the difference? And of course, also, how does this apply to this industry? Because I mean, we have global players. This is an industry with global players. So how do you compare that?
Yeah, the passporting is obviously a fantastic thing. We're passported throughout all of Europe, so we have all 27 plus jurisdictions in Europe. In terms of MiCA versus Genius, at a very high level, I'll try and keep it pointed. I've got a feeling that MiCA will amend. I've just got a feeling that the US regulation and the US economy and the geopolitics that is going on behind the scenes, I just think the US has a lot more power and weight to push behind it, and I think MiCA will likely fall more in line, because I do think global trade in its entirety will be settled on blockchain. So we do need MiCA to be more amiable and look at this ability to service other jurisdictions. Now, from our perspective, we currently service 80 jurisdictions. We can service other jurisdictions that have crypto regulation that require us to be licensed in those jurisdictions through a reverse solicitation perspective in certain circumstances. So there are options there from our perspective as a MiCA trading platform. But from a gaming perspective, it will always be challenging. I don't think, everybody's got the dream of a one-stop solution. You go to one place, you get everything you ever wanted, it's really cheap, it's really quick. Even to this day, we're talking about a blockchain layer that will create international fast payments. It will be, it will effectively be borderless to an extent between one regulated operator and another regulated operator, but it is still effectively fragmented. And you will need to have different specialists in different jurisdictions. So for us, we're going to enter the US market. That's a big target of ours over the next few months, year or so. We need a license over there. We might enter it through different means, partnerships, direct license. You need to be on both sides of the pond. So as I see it, crypto operators with a specific license like a CASP, they are digital banks, so you will have a similar setup. My opinion is you won't need the 40,000 employees like you did in the old days with banks. You're going to have a lot less employees, you're going to have a lot more reg tech, it's going to be a leaner model, you're going to embed AI, so it's a different thing. But yeah, but coming back to Genius versus MiCA, I think from an operator perspective in the gaming sector, you have to be involved in crypto now, you have to be involved in blockchain, you have to understand it. If you're not, you're already behind. It's completely taken over. It's taken over capital markets, forex, payments. It's no longer a multi-billion market. It's in the tens of trillions, and it's not going away. So I mentioned earlier that the head of the IMF has already said to all of its countries that are under its remit, do not close your eyes, do not cover your ears. This is here. How are you dealing with it?
Okay, thank you very much. And now, pretty much the same question to you, Pankhuri. How do you see that? And also because it's the same, it's the same simplification or complication that applies to your same market. And how do you see that? And is it actually making your life easier? In what ways, if it is?
Well, as I mentioned that, the dollar dominance is only increasing. So MiCA, although it makes it easier to have cross-border jurisdiction transactions within the EU, they need to come up with stronger policies so that the EU-denominated stablecoin becomes much more relevant as opposed to the US-dominated stablecoin at this point in time. Because otherwise, EU might just be left behind. And also, like 40 to 50% of their revenues of the banks operating within the EU get their revenues from payments and FX spreads, but stablecoin kind of reduces that spread. So they also need to think of a revenue model which makes it more sustainable to kind of have MiCA in place so that it becomes easier for companies to operate and provide those kind of facilities for cross-border transactions and to have a global dominance when it comes to a EU-denominated stablecoin, for example, because that's the only way for the EU economy to thrive. Otherwise, it again becomes a play where the dominance of the US-denominated stablecoin just goes on increasing, and the financial implications, as we see, becomes even more contagion if anything happens to the US dollar peg or the US economy in general. So I feel like it's important for MiCA to be more at the forefront of the play to make the EU-denominated stablecoin more approachable over there.
Okay, thank you very much. Now, as I see that we have less than 2 minutes, I'd probably ask all of you to give me like a 1-minute wrap-up of something that you want to share with the audience and that is relevant to the place that we are today, apart from Rome, but also the gaming industry, and how what we've just been discussing, different regulations can be used to the advantage or give a different edge or have open new opportunities in this market. So, Ron, do you want to start?
Sure, yeah. So further to my last comments, we have to be mindful that the gaming industry has its own regulatory layer. So even if you're registered under the Genius Act and you're essentially a digital bank, you've issued your own stable coin, it doesn't mean that you're ready to go to market and start processing transactions for online casinos or land-based casinos. It doesn't work that way. You are still going to have to navigate through the gaming regulatory environment. So notably, if you're a payment provider in the US, you need to get a payments license, right? If you're dealing with casinos. So this isn't a silver bullet solution for the gaming and betting space. Now, what I will say is that if you've issued the stable coin, but you're not engaged in payments, then you probably step back from that regulatory burden, in which case the payment solution that is handling your stablecoin will have to adopt that, right? But I'm very optimistic about finally having some stablecoin cryptocurrency solution being widely adopted in the United States and maybe Canada too. Currently, only the state of Wyoming allows it, and that is depositing crypto, withdrawing crypto, betting in crypto. Colorado and Virginia only allow deposits in crypto, but you have to withdraw in fiat. So that's kind of ancient time stuff. Hopefully, this will pave the way for more seamless payments. And then, if I may, related to that, think about the blue sky opportunity when you think about loyalty points and reward programs, which are commonly used in casinos. I mean, you're not allowed to pay interest, you're not allowed to pay yield, but you can still track transaction behavior. I mean, the data trove is enormous. And you could still reward in other ways. It doesn't have to be yield or interest, just by following people's token use. So I think it's very interesting, exciting times.
It's very, very interesting. Now, Tomas, the builder outlook on this, and your last remarks on what we've just been saying.
Well, what I'm going to say is this. So every regulated market right now is a centralized market. So all the centralized exchanges, the centralized payment processors, all are regulated. Our focus is in creating decentralized payment solutions, decentralized applications. So those are acquired by the businesses and runs in their own licenses. We believe that crypto stays, and if you're not part of crypto, you're gonna live in the past. And I really encourage every company, every person, every single person on the planet that it has to see this type of business, payment solutions, stable tokens. Stable tokens is huge, and it's gonna be last for years. So just be part of the revolution, be part of crypto.
Sorry, Ian, and then I'll close.
Yeah, I'll wrap it up quickly on my side. So basically, I'll just address the audience directly. If you're in gaming and you're not in blockchain and you've not got a crypto partner, whoever it is, you just need to be in the sector. The entire planet is moving that way. It's not slowing down. You will be using blockchain and crypto even if you don't know you're using blockchain and crypto, because your service providers will be having that in the pipeline. We deal directly at an institutional level, so we might even deal with people in this audience, but you wouldn't even know because we're actually plugged into the financial ecosystem. So I just think get involved, play around with it, have fun with it, do it personally, but definitely engage at a corporate level and understand it, because this is a new paradigm. And it's, back in the day, we all thought it was pie in the sky. Now it's confirmed, it's here, it's not going anywhere. I mean, just one last comment. The east wing of the White House is funded by big tech companies, including Tether and Coinbase.
Yeah, and now over to you, Pankhuri. To close on a more global and positive outlook. Oh, okay. Very sorry about that. So thank you very much to my fellow panelists, and thank you
You're welcome.
for everybody.
Thank you.